Welcome back. I'm Pratap here. Today is 18th April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, an announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available at our NeoStock YouTube channel. I kept the videos in a playlist supply demand zone price action course. I have provided the link to this playlist in this YouTube video description. So click the link, you will get into this page and then scroll down to the bottom of this page. Here starting from lesson 1.1, all the training lessons are available in an order. Please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I also provided the link to our Telegram channel in this YouTube video description. Please join in the channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in the channel. Now let's get into the analysis of high liquidity zones. Yesterday we identified 1, 2, 3, 4, 5, 6, 7, 8, 9 high liquidity zones we identified from daily time frame and 75 minutes time frame. And out of these 9, we got one successful trade today, that is State Bank of India. And 2 other stocks also, there were good returns it has given, but they are not valid trades because the zone was not fine-tuned properly in those stocks. But it worked today. Generally it won't happen, but today it worked. Anyway, that is a different story. And a couple of stocks zones also violated, and we know that those zones will be violated, because we know when a zone will be violated. And there are no stopped out trades today. So first one is State Bank of India. This is a purely successful trade. This is a 75 minutes high liquidity supply zone. We have a rally, 3 base candles and a drop candle with hidden body. And this 75 minute zone we fine tuned with 15 minutes time frame. Let me show you. So here we have a drop and we have a base candle. This is a medium size legging. This is a medium size base candle, and then we have a drop candle. Actually, this is a drop with hidden body. This is looking like a rally candle. No, this is a drop candle. The moment you add the hidden body, because some of you are not properly understood the hidden body and hidden zones concepts. That is what I understood based on the survey I conducted yesterday. So in case if you did not learn these concepts properly, please attend the lesson 9. Lesson 9, we have 2 videos, that is 9.3 and 9.4. In these 2 videos, I explained about hidden body and hidden zones. So this is a drop-based drop, 15-minute zone. This 15-minute zone again we fine-tuned with 5-minute zone. So again this is a rally, base candle and again a drop candle with hidden body. Got a very big hidden body. So that is a drop. You need to consider like that. So this is a 5 minutes zone, fine-tuned zone. See today what happened? Today prices entered into the zone at 9:20 candle. So between 9:20 and 9:25 candles, prices are within this zone, and again prices moved down and finally reached the 15 minutes target. So here we have a 15 minutes target, rally, base, rally. So till this target, when it reached at 9:45 candle itself it reached. You got an entry at 9:15 and 9:45 candle it reached. So that means within 15 minutes your trade is completed. And we have 1:3 RR is there from this entry zone to this target zone. So how much profit it has given? ₹8,475 profit. And which is a 4.2% return on the investment as per one futures margin cost. So this is about the SB, State Bank of India trade. Now let's look into the other stocks. IDFC. IDFC is also a 75 minutes zone. See, it looks like the fine-tuned area is violated here, right? We know that this will be violated. How? Look into the 15 minutes time frame. In 15 minutes time frame, we identified a drop-based drop. Drop-based drop we have identified here. And within this 15 minutes, we fine-tuned with 5 minutes time frame. So we have a drop candle, 1, 2, 3, 4, 5 base candles and a drop candle. That way you can consider. And another way, let me show you. You can also consider rally base drop. Rally, 2 base candles and then a drop candle. This is the way also you can consider. In either way, whatever it is, this is the fine-tuned zone. And this fine-tuned zone is already tested earlier. See here. This is already tested when? On 16th April. So this is a tested zone. So it is not a fresh zone. Because it is not a fresh zone, you cannot plan your trade. See today what happened? The zone is violated. See, there was some order flow still. It gave a push. This is not good enough to reach up to. But we know that because always we look for a fresh fine-tuned 5-minute zone. Otherwise, if you want to take multiple entries, that should be a 5 minutes high liquidity zone. But anyway, we didn't plan a trade in this zone. So this is violated, and after that prices went and came down. And this is the only one order flow we identified. And why prices came down, that is another reason. Maybe institutions created a zone here. That is the reason why. See here, rally, 2 base candles and a drop candle. Next time in the retracement, you can plan a trade in this area. This is how you can fine tune. We have a rally, 2 base candles and drop. This is today's price action. Today price didn't retrace here. And see the 5 minutes zone here. Is it good or bad? Yeah, we have a very good 5 minute zone. We have a rally, we have 2 base candles, and we have a drop. This is where you can plan. Or again one more drop based drop. This is what the trade you can plan next time. This is also you can consider. There is one more order flow here. We have a rally based drop, again drop based drop. These two fine-tuned 5 minute zones. That is the reason why this entire 75 minute zone is not violated, because institutions decided to create a new zone. Next time when prices enter, you can plan a trade in this area. But today, this zone is not a valid zone because it is already tested earlier. That's why we didn't plan a trade in this zone, because you already learned when a zone will be violated. The fine-tuned zones as well as the high liquidity zones. Okay, this is about IDFC. And the next one is Coal India. This is also a 75 minutes zone. See here we have a drop, 3 base candles, and again a drop. That is a hidden body. You got a sufficient hidden body. So that's why we consider this as a drop base. This is how our software identified this zone. And again we fine-tuned with 15 minutes time frame. When I fine-tuned with 15 minutes time frame, let me hide, you will get clarity. Here we have a drop, 3 base candles and a drop candle. This is one 15-minute zone. And again here we have a rally candle, leg candle. This is a leg candle, leg in. And a base candles, 1, 2, 3, 4 base candles. And again a drop candle with hidden gap. And these 15 minutes again fine-tuned with 5 minutes time frame. See, 5 minutes you will identify a good order flow here. See here, we have a rally candle, then a base candle, and then a drop candle with hidden body. So that's why we fine tune. Rally based drive, this is the area, order flow, and this is another order flow here. We have a rally candle, 4 base candles and a drop candle. This is the way we have again fine tuned another 5 minutes time frame. See what happened, this zone is already tested. When on 16th April, today is 18th April, 16th last trading session, this zone is already tested. So you cannot plan a trade in this zone. So that is the reason why we didn't plan. But actually see this zone, slightly pierced, it is within the stop loss. See how much move it has given. Because we cannot take second trade in the fine-tuned 5-minute zone, we didn't take a trade. Actually zone is pierced. Stop loss buffer protected our trade in case if you would have taken a second trade. Even one more time it is tested. See how much. But we can't take this trade. That's why I told you in the beginning of this video. There are few stocks that gave good returns from the zones, but we didn't take the trades because it is not a fresh, fine-tuned 5-minute zone. If this is a high liquidity zone, maybe we would have taken a second trade or even third trade. But I don't know, we don't know. This may not be a high liquidity zone. So anyway, this zone is pierced here. So once it is pierced, no more valid. Because it is already tested, you would not have taken second trade. So that's why we are not considering this is a valid trade for us. But it looks like it gave a very good return. But we can't break our rules. Today it worked, but it doesn't mean it works every time. Many times we have seen zones they test earlier and after that they fail. See the previous stock, IDFC. See what happened IDFC. Just sometime before we discussed IDFC. See, this zone is already tested. See today what happened. It tested today, came down a little, but immediately the zone is violated. You got the point. That is the reason why we cannot take a second trade from the fine-tuned 5-minute zone. You can take second or third trades if it is a high liquidity zone, 5 minutes high liquidity zone. But by default, all are normal zones. Only software only can help us to identify. That's why by default we treat every zone as a normal zone only. If multiple tests are happening several times, then we may assume that could be a high liquidity zone. Without NeoStock software, we cannot identify what kind of zones these are. That's why by default we treat everything as a normal zone. The fine-tuned, I'm talking about fine-tuned zones. Okay, this is about Coal India. Why we didn't take trade in Coal India? Because this zone is a... Actually, what was our plan? This one, the one above, there is one more fine-tuned area. If this is pierced, right? If the price would have gone a little up close to this, we would have taken a trade. But today, unfortunately, that didn't happen. After it pierced, maybe the demand would have been weakened. After that, prices came down. So that's why Coal India is not a valid trade for us. And the next one is ABB. ABB is also a 75 minutes zone. See, we have a rally, 1, 2, 3, 4 base candles and again a drop candle with hidden body. And this 75 minutes we fine tuned with 15 minutes time frame. How we fine tuned? Here. This is the rally candle we considered. The reason is some more body will be added here from the previous candle. There is a gap. So that's why I considered, and 2 base candles and a drop. So this is the way I fine tuned. So inside this 15 minutes, identified 2 order flows. See here the first one. rally base drop. Prices went up, but they didn't reach into the zone. And see this candle just touched this and again came down. How would I have considered? Maybe this is a leg candle. These three are base candles and again a drop candle. So this is the way two order flows we identified. Both are LOTL. Maybe risk could be very high, but this is the way fine-tuned. If anybody wants to take a trade, you have to take a deep inside only you can plan a trade because of the risk point of view. Anyway, prices didn't come today into this area, and moreover, there was a rejection also before that. Prices came close and came down. That means there is a strong order flow in this area, in this entire 15-minute zone area. So it's not an executed. Next, PEL, Piramal Enterprises. This is a 75 minutes demand zone. See here, hidden body you add, this is a rally candle and then two base candles and again a rally candle, follow through candle. This is a nice excellent zone. This again fine tuned with 15 minutes time frame, this zone. So here identified the order flow. Maybe you can consider this as a leg in, two base candles and a rally. That way we can consider. Here the reason why, you may ask a question, the reason why I didn't draw again another zone. Here also there is a possibility. Maybe a rally and three or four base candles and a rally. Because this is already pierced. Violated. Prices came very close previously here. See here, prices came here. This zone is violated. So that is the reason why I didn't draw this zone. But at present, this is the only valid 15-minute zone. And this again fine-tuned with 5-minute zone. Is it a fresh fine-tuned area? That is what you need to identify. Look into this 5-minute zone. We have a drop, two base candles and a rally. This is a fresh zone. Prices came very close, very close. They didn't enter into this fine-tuned area. A small gap is there, maybe few paisa difference. And prices went up. That indicates there is a strong order flow in this area. This is the point you need to observe. And see the recent price action. See here also, prices came very close to this zone. And again they pushed the rejection. That means in this area, institutions added a strong order flow. So that's why if prices enters, definitely we can plan a trade in this fine-tuned 5 minutes area. Or maybe if risk is accepted, you can add some entry buffer before this zone and you can plan your trade. But unfortunately, today prices did not enter into this zone. So we didn't get a trade. Next one is HCL Technologies. HCL Technologies is this is also a daily zone. Sorry, this is 75-minute zone. So here we have a rally candle, 4 base candles and then again a rally candle. This is the 75 minutes zone. Inside 75 minutes, fine-tuned with 15 minutes time frame. How I fine-tuned? Please look here. So we have a drop candle. This is a leg-in medium size candle, 2 base candles and a rally candle. So this is a 15-minute zone. Now this 15-minute zone should be fine-tuned with 5-minute zone. But did you observe I didn't fine-tune? That means 5-minute structure is not good. So let me show you the 5 minutes. Why I didn't fine-tune. because the number of base candles in the 5 minutes area is more than 6 candles. See here, we have a rally candle, 1, 2, 3, 4, 5, 6, 7 base candles, and again rally candle. That's why I didn't fine tune with 5 minutes time frame. Anything above 6 candles, we should not trust the zone. Maybe 7 candles may work sometimes in a rare situation. Out of 100 situations, maybe a 10% scenarios it may work. Even 7 candles also work sometimes. That is very rare. See, 90% failure rate is there. Because 90% failure rate is there, you cannot look for the 10% success. Just ignore that zone. So anyway, we left the trade. But today see what happened. Prices entered into the zone and see the push again after here at 10 o'clock onwards. So that's why I told you. Few trades, they gave good success, but we didn't take. We didn't take because they're all against our basic principles. Today they have worked. There could be other reasons. What could be the other reason? Institutions created a zone here. Maybe that could be the reason. We have a drop, 3 base candles and a rally candle. So next time in the retracement you can plan a trade like this. This is a 15 minutes demand zone. And within this 15 minutes demand zone, again you should fine tune with 5 minutes demand zone. Inside this, you have a rally base, rally is here. And also you have one more rally base rally here. This is a leg-in base, but this is already tested. So picked up the orders from here. Now you can say drop 2 base candles and rally. This is a valid one. You can plan a trade like this. But this one is picked up the orders. Already it picked up. If it is picked up, where you need to plan your trade? At 15 minute zone. We have a drop, base, drop. So can you plan a trade in this zone? This is a supply zone. Check the RR. Maybe you would have planned your trade like this, and this could be your target. 2.84, 2.9. So that means close to 1:3 is there. Maybe to get the RR, maybe slightly below, you might have reduced your entry. So like this you would have taken to get 1:3 RR. Actually it worked. Somehow even I ignored this during the live market. But anyway, it has given profit. This is a successful trade today. HCL Technologies, I don't know how many of you noticed this. How much profit we would have got if you would have taken a trade. What is your target? Here target could be 1468.25. 1468.25 minus what is our entry here? Entry we slightly adjusted in this long position tool in trading view. So our entry should be, why we adjusted to get the RR, because we want minimum 1:3 RR. If prices enter into this, then only you take trade, otherwise you won't take. That was the plan. Just a minute, I'll come back. Just okay, I'm sorry, I got an important call. Okay, so what is our entry? So 1460.75. This is our entry. This is the entry price. 1460 and target is 1468. This is with this you will get 1:3 RR. So you will be getting 7.5 rupees profit for each share. So margin calculator, if you are using, so HCL Technologies on 25th April future. So what is the lot size? 700. And what is the cost of your one future? It could be 1,82,357 or a little less, because prices moved up after that. By the time it came to the zone, it could be little less, but anyway, the change won't be much difference. Approximately we can calculate. So 7.5 into 700, you would have got 5,250 rupees. Which one? HCL Technologies. See, our high liquidity zones, given the profit or not, that is what we are looking here. That is what we are capturing. Whether you have taken the trade or you missed it, that is a different story. This is 5,250 rupees. ₹5,250 profit. What is the ROI? ROI is based on one future's margin cost. So how do you calculate? 5,250 into 100 divided by the margin cost. That is 1 lakh, approximately 1,82,357. Maybe it could have been a little less. We would have got even a better ROI, but okay. Approximate ROI is okay. 2.878. That means 2.9% ROI we got, because we are rounding off. Because it is approximate value, 2.9 ROI you would have got. This is a 75 minutes. High liquidity zone. This is a long trade. Actually, we got a second trade also today. Somehow I just completely overlooked during that market. But it is a valid trade. So when you got the trade at 13:15, next minute it reached the target. Go to the 1 minute time frame, you will get clarity. So in this candle we got the trade 13:27. When it reached the target 13:32, exactly 5 minutes it reached the target. That means within the 5 minutes you would have got a profit of 5,250 rupees. It's a very good profit. Even one more trade also it gave, second trade also, see here. Third trade, maybe high liquid, but intraday generally what you do? You take second trade, but you can't take second trade here because prices went more deep inside. Because they went more deep inside, accepting the second trade is not advisable. Prices came down. Accepting is advisable. See, if the trade is like this, just reached the zone and came down, then you would have taken a trade, second trade, during the intraday. During the intraday, many times order flow supports. But when prices are entering more deep, maybe today it worked, it is a lucky situation, it is a different. But many times this zone will be violated because earlier the prices went deep inside. Why it worked? Maybe institutions might have again added a new order flow into this zone. That could be the reason. They don't want this zone should be violated today. That's why they are keep on adding the order flows. That's why finally this zone is holded the prices. So this is one interesting analysis. Actually, HCL we didn't find a trade today because zone is not fine-tuned. 5-minute zone is failed. But again institutions created a new 15-minute zone. This is the new 15-minute zone. Inside the 15 minutes we identified two order flows. We have a drop, two base candles, rally. Again we have a rally, base candle, rally. Here also you have a rally candle. This is a legging candle. We have three base candles and a rally. Why we didn't take? Because it is already tested, this zone. Let me show you. This is LOTL scenario. This zone is already tested. It picked up the orders from here, so that's why I just deleted this. But these two are fresh zones. And the first one we got the trade. Because it is not violated, we didn't get a trade in this, the one below that. But anyway, this is another successful trade during the market. In the live market, if you would have done this analysis, you would have got the trade. This is about HCL Technologies. Next one is, remember whatever we are capturing in this Excel sheet, they are all the opportunities provided by our high liquidity zones. It's not about my trades or your trades. I am capturing here. I am capturing opportunities provided by our high liquidity zones we are capturing in this Excel sheet. Because I remember, because previously some people thought all these are all my trades. No, they are not my trades. They are the opportunities provided by our high liquidity zones. Because every day we are testing how our high liquidity zones are working. For the last 6 months we've been testing. This is the 7th month. So we got a consistent profits from high liquidity zones. And the next one is Indus Towers. Indus Towers is a daily supply zone, if I am not wrong. This is not 75 minutes. This is a daily zone, daily supply zone. We have a drop, base, drop. And when this zone is created in the year 2017, October 2017, and we don't have 15 minutes data and 5 minutes data in trading view, so we didn't find you in this zone. I just left the stock. So no trade. So we cannot plan a trade. But see today what happened? The zone is pierced. Now this high liquidity zone is, supply zone is no more valid. It is pierced. So anyway, we didn't plan a trade here because we don't know about the order flow. Because some people are asking, see, we don't have trading view data. How to trade that stock? Without data, how do you trade? Previously, some people asked these questions. See, before you people are asking certain questions, first you yourself evaluate. Without data, can we trade? Because without data, you cannot fine-tune the zone. Without fine-tune, you cannot tell the zone will work or not. It works or it will be violated, you never know. When you have such kind of confusion, you just ignore that stock. And don't ask me those questions again and again. You yourself can find the answer because it is a simple logic. Without data, nobody can place their trades. Okay, next one is Conquer. Conquer is also a daily zone. High liquidity supply zone. We have a drop, 3 base candles and a drop candle. And conquer also we got a trade, but we didn't accept the trade. See here how much profit. It went to our fine-tuned area. But fine-tuned area is up to 15 minutes, not 5 minutes. Today it worked, but it doesn't happen every time. Okay, anyway, we will evaluate. First, let us understand how we fine-tune this zone. So from daily, I am going to the 75 minutes time frame. We have identified two order flows. This is a ERC candle, failed ERC candle as a leg-in. You have a base and drop. And also again here we have a rally, base and drop. These two are the 75 minute zones. So that means inside both these 75 minutes, you need to fine tune with 15 minutes time frame. So this is the 15 minute zone. Rally, 3 base candles, drop candle, but this drop candle is not a great leg out. This is not a great leg out. But we have follow through candles. So that way we have, because here our goal is to identify at least any order flow. This is a compromised zone. So here is there any order flow is available. That is the 5 minutes level we want to check. That's why just compromised and drawn this zone. See, remember, sometimes you people should learn how to compromise. But the danger is the compromised zones, if you don't properly identify, a lot of failures will come. That's why you should be very careful. At the initial stage, you just observe how sometimes I am drawing the compromised zones. And here again I identified another 15 minute zone. We have a drop, base and drop candle, follow through candles. This is a 15 minute zone. This is a 15 minute zone. In this 15 I identified a 5 minute zone. See here the thick color, that is a 5 minute zone. That we will see. But here I didn't draw any 5 minute zone. Why? So let's move on to the 5 minutes time frame. See here we have a leg candle, you can consider this is a ERC candle, leg candle, a drop candle. This is a base candle. But what is this candle? This is again a ERC candle, rally candle. So that's why I didn't find any comfort. Maybe I agree, some people draw zone like this. And you can say today we got a trade here. It is very successful, you may say that. But this is not the case. How can you keep a ERC candle in between a base candle and a leg out candles? So that's why I am not comfortable with this zone. Here you should have a drop candle, ERC candle, but not a rally candle, ERC candle. So didn't plan any trade, but prices entered. There is an order flow here and came down, gave a very good profit. But anyway, we didn't accept the trade. So it's not a valid trade for us. It worked today. It doesn't mean every time it will work. But what is our actual plan? This is the area we planned. Why? Because we have a leg-in, medium size drop. We have 2 base candles. And again we have a drop candle and good follow-through candle is there. This is an excellent fine-tuned 5 minutes area. But today prices didn't come into this area. From here itself they went down. So for us it is not a valid trade. And the last one is Navin Fluorine. This is a daily zone, daily demand zone. This is a software consider this as a leg candle, this is a base candle, and these two software considered as a medium size leg candles. This is a medium size candle, but among medium size this is a small candle among medium size, and among medium size these two big candles. But they are looking like drop candles, right? Many people say, but software doesn't work like that. It is looking all these candles, seeing based on all these candles, because they are all very bigger. If candles are like this, then only it is considering as a leg candle. If it is smaller than these candles, software is considering, see, both these candles are smaller than these big candles. That's why they considered it as a medium size. Among medium, they are big candles. Otherwise, many people will be having doubts how software considered a large candle as a part of the base, according to the software point of view, because software look into the earlier candles. They check all these candle size, and with that it will compare the recent candles. So such kind of comparison software will do, and finally it will decide. So finally software decided it as a base candles. Leg candles, but leg candles can be part of the base if there is any earlier base candle. So earlier there is a base candle, and after that there are no more base candles. So medium size candles also added into the base, and finally this is a large candle. This is a leg out candle. That's why this is a drop, 3 base candles and a rally. That way software assumes this. Okay, fine. But here see, if the zone is not good, mostly there you won't find any order flows here. But are there any order flows? You fine tune daily zone with 75 minutes time frame. See here we identified 2 75-minute zones. We have a rally, base, rally, and we have a drop, base, rally. These are the 2 75-minute zones we identified. So now again, if both 75-minute zones, you need to fine tune with 15 minutes time frame. See the 15 minutes time frame? We have a drop, 2 base candles and a rally candle follow through candles. And again a drop candle, base candle and a rally candle. You can also consider this as a rally candle, because all the wicks, everything, body, everything, this is a rally. That's why I have drawn drop, base, rally. See, ultimately what I want an order flow at 5 minutes level, inside these fine-tuned areas. Now go to the 5 minutes time frame. So I consider this as a ERC candle. Okay, this is a valid leg-in, and then consider base candles 1, 2, 3, 4, 5. That way. This is a 5 minutes order flow. And moreover with gap up. See here, this leg out is with gap up. So definitely strong order flow will be there. There is a gap up, pro gap is there. And next one is we have a rally candle, 2 base candles and again a rally. This is good enough to consider, because by considering all these candles, next candle. Some people may say this is also maybe I can consider as a leg candle, medium size. I can include part of the base. That way also you can do that. But for us the real order flow we need to identify. The real order flows will be at the base candles level. So that is the reason why I just ignored this candle. In case if you want to consider this is part of the base, just ignore, that's it. This is the way we identified, because these are the base candles. Or what you can do, you can compromise and draw a zone. This is a leg out candle and follow through candle is there. Fine, this is a rally, base, rally, a valid zone. That way. This is what experience means. Sometimes by looking into the other candles, you need to take the decision. For me it is a valid leg out candle, even though it looks smaller, because I am convinced because of the follow through candles. Whether you draw the whole thing or whether you draw the small thing, what is the difference? Your risk will be reduced. Here you will place your entry, and if I draw like this, I place my entry here. If prices enter into this zone, then only I will take. If prices come here and again they moved up, probably I will miss the trade. So I don't mind, because this is the real order flow, according to me. So that's it. Today prices did not enter into this zone. We didn't get a trade. But in future, this analysis will be helpful to you. In future, if again software identifies the same zone, that day probably this analysis will help you to draw the zone and plan your trades accordingly. So this is about the high liquidity zones we identified from our yesterday's report. Hope this analysis will be helpful to you for our further study and analysis. Let us all meet again in our next video. Thank you.